everyone, welcome back to the channel. If you're wondering how President Trump's latest tariff decisions could shake up your investments, you're in the right place. Today, we're diving into what these tariffs mean for your money, whether you're into stocks, bonds, or even crypto. Stick around because this could be a game changer for your portfolio. Let's start with the big picture. In early April 2025, Trump rolled out some hefty tariffs, especially targeting China with rates as high as 145%. Other countries faced 10% tariffs, though some got a 90-day pause. China hit back hard, slapping 125% duties on U.S. goods. This trade war is causing chaos in global markets, and it's got investors on edge. So, how does this affect you? First up, stocks. The tariff news has already sent Wall Street on a wild ride. Just last week, the Dow plunged over 2,000 points when China retaliated, though it later bounced back when Trump exempted tech products like smartphones and laptops from the worst tariffs. If you're invested in tech giants like Apple or Dell, you dodged a bullet, for now. But Trump's hinted at new tariffs on semiconductors, so chip makers like Nvidia could face trouble soon. On the flip side, American manufacturers might get a boost if foreign goods get pricier. Think companies like Caterpillar or even smaller U.S. steel producers. Now, let's talk bonds. Trump's tariffs have spooked foreign investors, who are dumping U.S. Treasury bonds faster than you can say trade war. Yields on 10-year treasuries spiked to 4.5% recently, the highest jump in over 20 years. If you hold bonds, higher yields mean your bond prices are dropping. But if you're looking to buy, those higher yields could be tempting. What about everyday costs? Tariffs make imported goods, like clothes, electronics, and even cars, more expensive. Fast fashion brands like Shein are already bracing for price hikes. Higher costs could fuel inflation, which might push the Federal Reserve to rethink interest rates. If rates stay high, growth stocks like tech or crypto could take a hit, while value stocks in sectors like energy might hold up better. Here's the silver lining. Tariffs could spark opportunities. U.S. companies that don't rely on imports, like domestic retailers or renewable energy firms, might thrive. And if Trump's tariffs force businesses to move factories back to the U.S., sectors like construction and logistics could see a boom. Keep an eye on ETFs tied to American infrastructure for some low-risk exposure. But there's a catch. All this uncertainty is killing investor confidence. One report estimates these tariffs could shave 8% off U.S. GDP and cost middle-income households $58,000 over their lifetime. That's not pocket change. Plus, Trump's flip-flopping, pausing tariffs one day, threatening new ones the next, makes it tough to plan. Just look at semiconductors. 1 minute they're exempt, the next, he's launching a national security probe. So what should you do? First, don't panic. Markets hate uncertainty, but they always adapt. Diversify your portfolio, mix in some US-focused stocks or ETFs to hedge against global trade chaos. If you're heavy in tech, maybe trim your exposure until we know more about those chip tariffs. And if inflation worries you, consider assets like gold, which hit a record high of $3,160 an ounce this month. Finally, stay informed. Trump's team is moving fast, and what's true today might change tomorrow. That's the rundown. If you found this helpful, smash that like button, subscribe, and ring the bell so you don't miss our next video. Drop a comment below. How are you adjusting your investments for these tariffs? Let's keep the convo going. Thanks for watching, and I'll see you in the next one.